Dear student, today in our class, I had already shared this problem with you. Again, I repeat this problem. The capital structure of H Limited is as follows: 14% preference shares of rupees 10 each, amount is 20 lakh. Equity share of rupees 10 each, amount is 32 lakh. Reserve and surplus 16 lakh. 10% debentures 24 lakh. 11% loan from financial bank or financial institutions, it is 28 lakh. Total is 1 crore 20 lakh. The average annual profit before interest and tax is rupees 24 lakh. Income tax rate is 50%. Price earning ratio is 9. Compute the value of equity share of the company. So this was our today's problem. So now please follow the whiteboard for solution part of this problem. So first we calculate the valuation of equity share under earning capacity method. Calculation for valuation of equity share under earning capacity method. Under earning capacity method. Statement for the calculation of annual profit available to equity share holders of H Limited. Average annual profit before interest and tax. Average annual profit before interest and tax, which is profit before interest and tax, is given amount is 24 lakh. Less interest on long term liabilities. Interest on debenture interest on debenture, which is 10% of 24 lakh is 2 lakh 40,000. Number 2, interest on loan from banks or financial institutions. It is 11% of 28 lakh is 3 lakh 8,000. Total is 5 lakh 48,000. Outer column 18 lakh 52,000 is the earning before tax, which is EBT, less income tax at the rate of 50% on rupees 18 lakh 52,000. That means 9 lakh 26,000. Earning after tax EAT is 9 lakh 26,000 less transfer to general reserve. Assume 10%. We make an assumption of 10%. Uh, so you should have to follow the particular provision in respect of the transfer of earning after tax, the amount earning after tax or profit after tax to the general reserve. Uh, as per the particular when the final end semester exam will be held, যখন ফাইনাল এন্ড সেমিস্টার এক্সাম যে সময় হবে সেই সময় এই যে ট্রান্সফার টু জেনারেল রিজার্ভের রেটটা কত আছে ওটা তোমরা একটু দেখে সেই অনুযায়ী ক্যালকুলেশনটা করবে। আমি এখানে জাস্ট একটা ফর দিস প্রবলেম আমি একটা অ্যাজাম্পশন নিয়েছি 10%। ওকে, 10%, assume 10%, so it is 10% of 9,26,000. That means 92,600. 8,33,400. Profit available to both profit available to both the shareholders. Both the shareholders means here preference and equity shareholders. 8,33,400 less dividend on preference share capital it is 14% on rupees 20 lakh. The amount is 2 lakh 80,000. 5,53,400 is the profit available to equity share holders. 5,53,400. So earning per share equals to 5,53,400 divided by 3,20,000 number of equity share. So it is rupees 1.73 approximately. Price earning ratio is price earning ratio equals to price earning ratio equals to price per share price per share divided by earning per share price earning ratio. Okay, so price per share equals to price per share equals to price earning ratio is 9 multiplied by earning per share equals to 1.73 rupees. 1.73 equals to rupees 15.57. So this is the value of each equity share under earning capacity method equals to rupees 15.57 equals to rupees 15.57. So this is the first part of our problem. This is the solution part of the first segment of our problem, because in this problem uh, we have to calculate the, compute the value of equity share of the company. So there is no such specific method has been mentioned in this problem. So that's why we should have to calculate the value of the equity share of this particular company as per the earning capacity method, then the intrinsic value method, and last of all the fair value method. All these three important methods we should have to apply for calculation of the value of each equity share of a given company. Okay. So this is the process to calculate the value of each equity share under earning capacity method, and the answer is 15.57. This is the first answer. Okay. Next, next we calculate number 2. Calculation of the valuation of equity share. Calculation for valuation of equity share under intrinsic value method. Under intrinsic value method. This is the second part of the problem. This is the second part of the solution part of the problem. Under intrinsic value method. Statement for the calculation of the net assets available to the equity shareholders. Now we calculate the amount of net assets available to the equity shareholders. Own capital. Under the own capital, 14% preference share capital. It is 20 lakh. Equity share capital, equity share capital 32 lakh. Total 52 lakh. Internal capital, reserve and surplus 16 lakh. $68 lakh is the shareholders equity or fund. Shareholders equity less 14% preference share capital. Amount is 20 lakh. It is 48 lakh. So net assets available to the equity shareholders. Actually, in this problem, there is no such amount or no such information related with the asset side of the balance sheet. But here we apply uh, the one of the most important accounting concept, that is balance sheet concept, where uh, the equity equals to asset, the liability side and the asset side both are equal. So that particular asset equals to that particular part is liability plus equity. That means the internal liability and the external liability, the summation should be equals to the asset. So here we consider that particular principle. That's why here we for calculation of the asset available to equity shareholder, we consider that information related with the liability side or the own capital and the internal capital. Uh, Own and internal capital, and uh, from this calculation, we have deducted that portion of preferred shareholder, which is 20 lakh. So this is our total volume of the assets available to the equity shareholder. Now, the intrinsic value of each equity share equals to 48 lakh divided by 3,20,000. It is rupees 15. Clear? Now number three, third part. Valuation of equity share under fair value method. So what is the process of calculation of the equity share under fair value method? Fair value, this one is equals to, fair value equals to what? Intrinsic value, intrinsic value of the each equity plus value of the equity share under earning capacity method divided by 2. So it is the average of the last two method which we have already calculated. So the answer is 15 rupees 15 plus rupees 15.57 divided by 2 equals to rupees 15.28. So the valuation of equity share under fair value method is 15 rupees 15 related with the per equity share under the asset available under the intrinsic value method, and the 15.57 under the valuation of each equity share under earning capacity method, and the average when we divided by the summation has been divided by the two, we will get the which one under fair value method, value of the share 15.28 under the fair value method. Clear? So that's all about our today's discussion.